Thank you very much, Per, and for joining me again on this live session. And welcome. And
Thank you very much, Sandeep. It's a pleasure to be here.
Thank you very much. And today's topic is how a pricing strategy can help increase the shareholders' value. You know,
Hmm.
the shareholders' value is so important in everyone's mind, and whether you are keeping the company, selling the company partially or if you're planning to do an exit, or you are trying to take a loan from somebody, or just getting the valuation done. You know, it's in everybody's mind. When I look at various ways how entrepreneurs and founders and business owners and private equity firms or VCs, all these people are trying to increase the value of the shareholders or shareholders value or
Yeah.
there are many things which goes into them. Maybe growth of the company is important, which industry they belong to or which company they belong to. What has pricing strategy to do with it?
Yeah. The First of all, let me. I think for the benefit of the audience, let me very quickly mention the background on why I'm called the Price Whisperer and what we do. And the story here is that I ran a couple of companies in Europe before I came here to the US. And I came here to establish a division of a fairly large public company and ran that for a while. And then I had another 4 CEO positions. And we did experiments in all of these instances only because I was interested in pricing as a topic. And some of those experiments worked really very well. Others were complete duds. And what I'm saying that it worked well, it means next quarter revenues were up 25%, right? And what I had learned in business school and could read about pricing was so theoretical and academic that it didn't in any way help us understand why some experiments worked and others didn't. The And then 15 years ago, I decided I was too old and too opinionated to be a hired gun. So I set up my own shop and I developed the process that I would have needed in any of these companies to understand why some of those pricing experiments worked and others didn't. So, and that process, in short, consists of doing online willingness to pay research. And from that online willingness to pay research, it's possible to accurately predict sales volume and revenue at different prices. But that's the start. Then that prediction is segmented by different customer profiles, by different product or service features, function, benefits, by different marketing channels and methodologies, by different sales channels and methodologies. It means that we will know how all of those attributes of a product, of a service, of a market, of a seller, of a buyer, affects what they are willing to pay, i.e., whether it support higher prices or not. And in most cases, companies are underpricing themselves. They're too timid with pricing. And I don't know how many CEOs I've talked to who said, if we increase our price with just 1%, we're going to lose all our business. That's not the case at all, of course. But to answer your question, why is this important? Well, if you have the answers that I just sort of very quickly mentioned, your company typically will have a doubling of sales growth, a 25 to 40% higher margins, and as a result of that, you will see a more than doubling of shareholder value, because this becomes a hockey stick. So it happens very rapidly.
I thank you very much. I think that's very well said, and I have a feeling that most of the entrepreneurs or companies or CEOs and whatever size they are usually going in for either cost plus game on the setting up the prices, or they are deciding based on pegging it to the competition or something, and they usually look at, hey, my competitor is at $8 or $10, oh, I'll be better at 9 or something like that. And so what do you think, and I think you mentioned about the willingness of the customer to pay how much. How does it compare with these two or three strategies which you mentioned?
Yeah, the willingness to pay is willingness and ability to pay are obviously intertwined, right?
Yeah.
And when you set your price using cost, your costs have no relevance to what the customers are willing to pay or are able to pay, right? And for that reason, it's absolutely crucial that prices are set based on those willingness and ability to pay, not on cost. And it's there's another issue with cost-based pricing. The most companies who use cost-based pricing, they use an uplift, a margin that is based on sort of rules of thumb in their industry, right? Some manufacturing industries, old school, that margin uplift is often 35% or 50%. In retail, it's often 100%. In some industries, it's 5 times the cost. In some, it's 10 times the cost. And again, none of this have relevance to the value that the company delivers. Now, the particular issue that I wanted to bring here is that when a company uses cost-based pricing, they typically use the same margin figure for all their product or services. And in any company, some of those product or services will be commodity, some will be completely unique. And using that same margin uplift for all for all products or services means that some commodity products will be overpriced, and you won't have the sales volume that you want. And the unique products will definitely be underpriced, because unique products by default have some level of pricing power. So the result of all of this is lower sales volume and lower revenue than should prices be set based on the company's buyers' willingness to pay, right?
Yeah.
The other thing you mentioned, to set price as looking at a competitor, setting price to match a competitor is typically the first step into the commoditization death spiral, right? Because you look at a competitor, if they have, and even if they have prices online, their website may be targeted, so in different areas, usually different prices. They may change prices 8 times a day. You don't know. They may, and unless you actually buy this, whatever they sell, you don't know what specials they do, what upsells happens after you booked your order, etc., etc. So at best, that could be a sort of an indication of what their prices are, but it's not something that you really can trust. And like I said, then most companies says, when they do competitor-based pricing, that we're a little bit better, so we price ourselves a little higher, or they are a little bit better, so we price ourselves a little lower. And you're back into gut feel pricing, right?
Yeah.
But and if your competitors doesn't have prices on the website, it's almost impossible to know what they're selling at. Maybe you have joint customers, but a customer is rarely willing to tell you as a vendor what your competitors are charging. Maybe you have joint resellers, and it's the same thing there. This is not, at the best you can typically get is like last year's price list or half of last year's price list, or maybe the GSA schedule, or
Mhm.
maybe half the international price list from last year. I mean, it's it's it just doesn't make sense.
Yeah. So and it seems like you and your process, you do tons of other stuff also, and the benefit of all this, what you do, uh, show up actually in the pricing change, that number we see
Hmm.
on the pricing. But pricing, it seems to me, when I talk to you, is not a number. It has tons of other things which goes into that number, and you look at all those numbers, not just do a little bit of a research and come back with and say, hey, do this price. May I know?
No, and that's the for pricing to be really, and we talk about here how price affects shareholder value, eh? And it's really important that when you start looking at price as a centerpiece of your business strategy, everything in the company is going to change. And specifically, what's going to happen is that it's going to enable the company to very quickly elevate itself to the next level, whatever that next level happened to be, you know. And I have um, any number of clients to my company, which gone through that process of first engaging us to do the willingness to pay research that I mentioned, that not only include pricing but customer targeting and product or service optimization and so forth, um, and and that by itself means that the companies start to look at pricing at a very different way, and and many small decisions in the company becomes very different. And because you're thinking about how all the time the company is going to think about, where can we take price, where can we discount less, you know, where can we bundle to add value to our clients, where can we unbundle maybe to take price and so forth. And the end result of this, you know, I have, like I said, I have clients that where over a period of a few years they have 10x their revenue, you know.
Yeah.
And you know, going from 10 to 130 million, going from 100 million to over a billion, go or the likes, or in some cases, you know, in a couple of years it goes, it's 5 times, or over a year it could be 5 times the revenue, if it's really well, if the company happened to be really underpriced and so forth. So um, it's pricing is not a number. It's a business strategy, or it's part of the entire company's business strategy. And it's when you look at pricing from that point of view, everything is going to change, right?
Yeah. And I think what you said is that so many things go behind to decide what the price should be, and to get that success where you are able to increase and double the shareholder value, like you
Yeah.
said. And so when we in my mind, it tells also that when CEOs and when private equity firms and all that, and I would also like to see this slide in a few minutes where
Mhm.
you have all the logos for where
Yeah.
you have beautiful picture where I see so many good companies have hired you for that. My question is that when we go into all these different aspects of strategy and all that to come up with that pricing number in the end, we actually in that process, the customer is able to understand about their company, their products, their product market fit again, and their positioning of the company, the positioning of the company in the market, the customer segmentation, the benefits, and all that what you have talked about. You know, which one we should, like, there are 10 benefits which may be coming out of my new product. Like for a founder of a company who is recently funded, they sometimes they don't know which one is they should target first, right? So
That's right.
out of the 10, which one is the right one? I always think of milkmaid example. I'm from India, like you know, and many years back, milkmaid was a brand which came out, and it was kind of a creamer which they sold it as a uh, which they tried selling it. It was from Nestle, and they tried
Mhm.
selling it as a coffee creamer or a tea creamer. Nobody bought it. Nobody cared about that. They all wanted a fresh milk. They tried a
Mhm.
few times for many years, nothing worked, but then she changed it, the same product, same thing, and they changed the use case to to make it easy for the housewives to make sweets at home
Mhm.
and use it as a creamer. And that
Mhm.
suddenly that positioning changed everything, and the company became very successful. The similar way, when when we are looking at, you are looking at the going into the details of the company and understanding and helping the company understand what the customer wants, willingness to pay, and all that. They find out all these things. May I know a little more? And one more thing, when you add, is that give me a couple of examples. Like, I read about Rolex, I read about Red Bull in the past. So may I know a couple of such examples also from you?
Yeah, we can talk about that. It's really to understand what business you're in, right? And I read an interview with the CEO of Rolex, and this was a few years ago. He was asked about the state of the Swiss watch industry, to which his answer was, "I don't know. We are not in the watch industry, right? They make watches, but they're not in the watch industry." They and Red Bull is sort of the same thing. If you think about their business, they sell sugary, caffeine laden drinks, but their business is extreme sports entertainment, right?
Yeah.
That's And they monetize that by being able to. And this is actually research that we've done. Um, they command about a 20 to 25% higher willingness to pay than competition who is not in the sports extreme sports entertainment industry, right?
Hmm.
So it's about where you can add value and associations of value in your company that often requires outside the box thinking. I
Hmm.
have other examples of companies, and this is a well-known brand in the golf industry. I'm not going to tell you who it is, but um, they um, they went to market with a positioning statement that led them to sales, of course, but a different positioning that we found for them generated about a 25% increase in revenue, right?
Wow. Yeah.
Um, both from um, both from being able to increase their sales volume and sell at higher prices, right?
Hmm.
So
Yeah. So I another thing which I always think is that there is always a resistance. At least in my mind, there is always seem to be resistance from the salespeople, and usually the CEOs and the founders or entrepreneurs and the owners are afraid to unsettle the momentum of the sales team by increasing the prices, or the
yeah,
salespeople are always pushing back and say, "Oh, it won't work." What
yeah.
do you have to say how we help in that direction? And our sales people are our ally? Are they going to be benefited or not?
No, it really comes from salespeople. If I mean they're out there negotiating all the time, and what they hear daily is that your competitor is better and cheaper, right?
Yeah.
And that grinds them down. It grinds them their self motivation and so forth down. So they start to doubt the company. They start to doubt themselves. Not everybody, of course, but many does. And then therefore they see that low prices is the only way to go. But that's not the case. I mean, I had conversations with a enterprise software company a few years back, and they sent out their salespeople, and the first thing that came out of the salesperson's mouth was, "And we'll start by giving you an 85% discount," right? what kind of value statement or value does that message? Well,
Yeah.
to the buyer, it says these guys are desperate, right? Nobody's going to buy this. For some reason, they can't sell it, so they have to discount so much because nobody's buying it, because there must be something wrong with it, right?
Yeah.
So the right way to do this, and first of all, also want to tell you that purchase agents goes on negotiation training about every 6 months. How
Yeah.
often do salespeople do sales training? Once every 10 years?
Yeah.
I mean, who's got the upper hand, right? It's
Yeah.
very, very easy to understand. But
From
let me just give you the way to do this is from that willingness to pay research, where we can predict sales volume and revenue. You create training material that you train the salespeople that says this is what the market is actually willing to pay. It's not the stuff that you hear what they're willing to pay. And
yeah.
from that training, you also get to understand this is how you best defend your prices. These
Yeah.
are the features and functions and benefit and statements and so forth that the market is willing to pay more for. So this is
Yeah.
what you're going to use in as you
And
you know and but let me give you an example here. A friend of mine, he came up with he's a venture capitalist, but he had a side business, and he came up with this pouch of ready-made drinks.
mhm.
And ready-made drinks that you buy in the grocery store is normally um, cheap and nasty, right? His product was a really premium product. And the first time he got the deal with one of the big grocery store chains, he he was um, he was negotiated down so much that he was selling at a loss. And but the next time he came in to renew the order, he had the work that we've done for him with him, so he could actually demonstrate to the grocery store buyer that the market was willing to pay much higher prices for his specific differentiators, the quality and the packaging and even the brand name and so forth. Uh, and 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 because of that, he got the price that he needed, he got the volume that he needed, and he obviously was very happy. But the point I want to make is that this created a win-win-win situation, because the seller here um, could sell the product at a profitable price and at a volume that made sense for him. The grocery store chain got a higher margin product, so they made more money on it, and the consumers got a product that they wanted, right?
Yeah. Yeah.
So
Agree.
everybody wins.
Yeah. So I have so we have 6 minutes, 5 minutes, and I have an important observation here. When we look at, usually when I go to shop, I usually look at, I don't know why it happens that when we look at some products which are at even maybe $1 higher, than they both are, say, one is at $4, the other is at 450 or something, 470. I don't know why I tend to lean towards the 470 and feel that it is just a 70 cents more, it must be better. So do you have any
No, it's
experience in that?
absolutely it's something called expectation bias, and the price sets an expectation of the quality and the benefit of a product or a service. If you're too low price, buyers think that it's no good and won't buy it. And we all been there. We hold something in our hand, and we say, this, I kind of want to buy this, but the price is so low that this can't be any good, and we don't.
Yeah.
And the lower the price, the more and more people, potential buyers, get that association, and therefore at lower prices, sales go down. And I have oodles of examples of this, um, of companies who sort of doubled their price, and lo and behold, to their big surprise, the sales volume doubled as well.
Wow. and that would have been very good for the company. So I
Yeah.
have, I think there is seems to be a message from somewhere, but I want to ask before I look at the message. Um, I know we have a very offering for medium-sized companies and large companies and all that, for small companies, for research and for pricing recommendation. We are a pricing boutique company. But one thing which I want you to know is, if somebody wants to learn this on its own and
Mhm.
implement, like nobody, everybody cannot spend this thing. So do you have any course or anything with people can
Yeah,
learn and
I
that?
do. First of all, there is a lot of information on the website, and um, because I got such a weird name, I suggest that if people want to get hold of me, just Google the Price Whisper. You're going to find me. You're going to find my latest book. You're going to find the website and so forth. But you asked me to prepare this, so I have, and I have a couple of let me see here. Couple of just very brief slides I want to show.
Okay.
The first one is this one. This is some of the companies, and I'm missing a few logos. So there's going to be, I'm sure that you recognize some logos, but these are companies of all different sizes, right?
Yeah.
And this represent maybe 3.5, maybe 4,000 different product or services that we worked with over the years. And then we have this masterclass, and it's it's a 19 episode video episode class that tells you everything there is about pricing, really, and the methodology and how you should think about it, how you should put that into action as a profit driver.
Hmm.
And you'll find that masterclass again on the website. So
Okay.
uh, Google the Price Whisper, find my website, and that masterclass, it's $950, I believe, but we're giving away a 20% discount for the audience here. So
Okay. Thank you very much for that. And I have no further question, Per, and I look forward to meeting you again on a different topic next week.
all right.
Okay. Thank you very
Thank you so
much.
much, and I hope the audience found this interesting. And thank you very much, Sandeep, for inviting me.
Thank you. You're welcome.
Thank you.